Hello, everyone. Good evening, good morning, good night, whatever you have there on your side. Mine is evening. This is Sam from myforexmagicwave.com. I'm making this small video just to show that what I'm teaching in my webinars, and also, sending out charts in the email to the subscribers, about these trade setups and all that whenever they come in. Last week was great. Too many setups were made, and we did really good. But let's talk about this pattern. I mean, I teach everything almost, like harmonic patterns and Elliott Wave, channels, trend lines, supporters, and supply, demand, everything. They're all interrelated, by the way. If you learn everything, that's fine. It's good. It's the best. But if you can only learn, like I said, the three methods, either harmonic trading or Elliott Wave trading or channel lines, trend lines, and support resistance. So any one of them, you become master, and then you will do very, very good. Okay. So, but I put everything together because I already learned. So why not, right? And they help each other. All three study. When you put them together, you really can pinpoint the turning points. Okay, now let's talk about this one. All right, just don't want to make a long video. Just want to show a little bit of this bad pattern, this harmonic trading, and it's not invented by me. It's somebody else. I think it's somebody. But they're good patterns. They work. It's all about Fibonacci calculation, actually. Leonardo Fibonacci is the guy, is a mathematician who gave us this, Fibonacci sequence, golden mean, 61.8. And we derive other ratios. All of these, 38.2 and 88.6, all of these are, from 0.618 or 61.8. For example, the 78.6 level that we use in Girdle is nothing but the square root of 61.8. Okay, and this, when you take a square root of 61.8, it is 88.6 right here, which is the end point of the final calculation of the bad pattern. You know what I'm saying? So they are the same. It's this 38%, 38.2% is nothing but the square of 61.8. When you do multiply 61.8 times 61.8 comes 0.3, 38.2. So those are, all of these numbers, right, basically are from 61.8. And that's why they always work. This is all about mathematics. Anyway, so I don't want to get into that. I just want to show you that these mathematically calculated patterns. All right. So Scott did a very good job doing that, and what I'm doing basically is like everything else, like let's say medicine. All right. So it's a huge field, and every day we find something new. Okay, and if we stick to what we know now, and 10 years from now, the same thing, it doesn't work that way, right? So what I'm doing is that I'm studying all these, and even Elliott waves and these harmonic patterns and all that, and I'm finding new things. Okay, I'm not afraid of inventing things, and the more I study, the more I spend time calculating all this. I'm finding new ways, new patterns, and most importantly is the new ways how to trade, because that's our main goal, to be able to trade positively, productively, and make some pips and make some money, right? Nobody wants to be an Elliottian here. Okay, we just want to use get enough knowledge to find out which wave we are in, and then we trade and make some money. That's all. So that's what I'm trying to find out. So let's talk about this bullish bad pattern. The conventional way to play, you're gonna find is all the website out there. You can go and take a look. They all will talk about that. When you get to point D, then you buy. Let's say a bullish like this one. This is a bullish bad pattern, right? So the bottom line is that once you get to this 88.6%, and some says that it has to be precise. If it is less than that, don't do anything. I don't understand that concept at all. I think that if you learn and you more and more, then you should be able to make and trade all of these turns. Okay, why not? Okay, there has to be a way. If we know that this is the pattern, right? X, A, B, C, D. So when you see the X and A, and then it's point B is made, and then the price is going up, you know that either it's gonna make C and drop, or just keep going, right? Going up and break this A, and go for AB is equal to CD to the upside. But if it doesn't, then what? If it makes a turn here, then obviously this it's posting a point C, and then it's going for the D. So why not trade that lag? It's too many pips to to be wasted. Okay, so this is what it is that that's what I teach in my webinars, how you can pinpoint and judge, and what are the tools that you have to confirm that yes, we have posted a point B or point C is done, and we're gonna make a turn and go for the D. So you make an entry using my Magic Wave strategy, and nice and clean, and then step by step what you do. So that's why I wrote down here that you can, out of this pattern, before it is made and after it's made. Altogether, I have like 3 basic points. Trade number 1 is sell at point C. So once your C point, if it's not going to touch this A high, the high of the A point, and if it makes a turn, then the C is done. Okay. How do you know that it's making the turn? That's a long subject, and I explain that again and again in my webinars. Basically, using my Magic Wave strategy, that is also like a confirming tool for a turn is made. Okay, so once you make the turn, you find an entry. If you find an entry, that means the turn is already made. If the turn is not made, you're not going to find the entry. Simple. Okay, so if you find the entry, you take it. So you sell at point C, and the next target is the point B, the first target, or the next trade. As soon as you break that, that would be a breakout trade, and you sell it again right here, and then take it all the way down to point D. Now, why sell at point B? Because if it's a bad pattern, it's worth it. If it's a Gertley kind of thing, let's say the first pullback point B is 61.8, then the Gertley finishes at 78.6. So not too many pips in between from 61.8 to 78.6. It's it's a very small distance. So I would not recommend selling at point D if you are observing a Gertley. But if it is a bad pattern, especially if the first pullback at B is only 38% or even 50, from 50 to 88.6, you have pretty decent amount of pips to make. So why not get in around C when the CD starts? Then again you can sell around B at the breakout of the B, and then all of us all the way down to 88.6. So, just before that, close everything, or maybe leave a little bit. Close 80% and let the 20% just in case it's just drop is continue below X, and just keep going. You never know. This is Forex. But when you see that it is a stopping here, and especially if the trend is up all the way, it's like a bullish trend, and the whole C cell and the B cell is probably like counter trend or something, then obviously you need to close that and start looking for a buy at D. I'm going to give you a practical example. That's how it is. How I do it, and how I find these things. There is a one pattern right here. By the way, you can see it's X, A, B, C, D, but it's not marked, so I'm going to pass. Which pair I saw? Let me see. I think it's no, the other way. I think it's a pound. Man. All right, okay, I think pound yen. Right here, okay. Now, look at this pattern, all right? This is the pair, pound yen. I found very interesting. So many. You can see it right now. I don't even have to tell you. Okay, this is X, A, B, C, D. This is between, this B point between 38 and 50%. So when the point C, then you see a bearish engulfing, then ranging, and all of a sudden this bearish candle here. That is a strong signal that we are going down. toward to, D point, towards D point. And that's where you make an entry. And that is a strong trade. And you can see that it went all the way down to 88.6. So after this break, another thing is that you just, this for the breakout trade, you can just put a pending order here or wait until it breaks and then retest and drop again. Then you get in. All right, so that would be a second trade. And the third trade is obviously where it go. See the third trade, buy at completion of bad pattern at point D, which is right here. Right? So now you're buying from here, and then you're going up. What happened here? Hold on. My webinar thing is just messed up. All right. It's when go away. Okay. Now, okay. So when you buy it, then you have to be careful about, very careful, these lows here, especially the B point. All right. So look what happened here. Now, from here, you have another, this length is X, you can count it XA, then you have a BC, the same scenario here, then you buy here, then you see the same scenario, same pattern here, and then you have same pattern here. Okay. Now, it's very easy for me to say because I do it all the time. I have learned it, and I can teach you, and I can, it's like just a play. It's a game for me. And I know and I realize that it is not that easy for a lot of people out there. And that's why I do these webinars and I teach you how to do it, how to recognize. Let's see if I can show you. Oh, yeah, last week was a very, very solid bearish bet. And I sent out to everyone and everybody enjoyed it. And we made a lot of money out of that pair. Look at this one. How nice and beautiful it was. Okay. X, A, B, C point was a trend line bounce, third touch of a bounce. I always emphasize that third touch of a trend line, a bounce from a third touch of a trend line is very, very solid trade, even if it's a 15-minute chart, 1 minute, 4 minute, daily, weekly, whatever. If you see it, it's that the trend line is being touched for a third time, and you see it's bouncing like a bullish. If it's a bullish move. You see a couple of bullish candle, that's it. You find your entry, whatever strategy you use, and you will have a very solid trade. And this one was XA, and then, like this pattern here, when you have big length here, and then these 2 points within this length, and especially this one is 38% or 50%, know that this rally is going to go to 88.6. Definitely. So that's why I'm very expert. I'm very, very sharp taking the CD leg, trading the CD leg always. Okay, and I love to do that. Once you get there, I send the chart to everyone that we are there and start looking for shorts and go back to the trend line. And let me see if I have the chart to show you. This was my recent trade. Pound yen, by the way, is going big time to the upside. Just keep looking for longs. Where it is. This is a chart, I think. This one, the other one. Okay, I think this one. So hold on, it's coming. I got too many windows, too many things open, so my computer is kind of a little slow, especially running this program. Okay, here you can see that I wrote, send out this before chart to all my subscribers. Evening star candle formation, look for short setups to go back to the rising blue TL, right? And Friday, we were at the rising blue TL. It dropped like, like a rock. Why? This is the pattern was complete at C, that the bad pattern, and then you find the magic wave entry here, and then boom, back to this level. So now I don't know what happened, but see, that's what I'm saying, that the C point was a third touch of a trend line. So we went long from here. And the second trade was also a very nice one because of the breakout of this B point, right? And all the way goes very close to this X, and, even a little bit above 88.6. So there was a nice amount of pippage we made, and then the reversal from there. So if you know these patterns, that this is how they make, this is how they move. Okay, X, A, B, C, D, again and again, the same thing happens. You can do pretty good. Okay, so this is the chart that you can see that is all made by me. I did a lot of calculation and a lot of, it's similar that, what you can find in anywhere in the market. But just seeing the pattern is different, but understanding it completely and play and trade all these turning points is what, requires some serious learning. Okay, so if you want to learn all these things and be a master of this harmonic trading, and it is also Elliott Wave. So when I teach the harmonic pattern, I also teach Elliott Wave and put everything together. That especially where do you find these patterns is very important. Okay, if you find it in the wrong place, then it's not going to work. Like I'm teaching here that you see this this one is like 1, 2, 3, 4, 5 Elliott Wave, and then you have ABC correction, and that's where it is usually you'll see this bearish bat or Gertley and all that. Okay, after a big bull move, if you see a bearish bat or Gertley, just like we saw Euro Aussie, it was a correction, not impulse move, but it was at the end of the correction we saw it, and then it dropped, right? So this is how it is. And similarly, after a down move, when you see a nice look another way, I show you. Oh, well, that's the same thing. 1, 2, 3, 4, 5. You can see this butterfly here, ending butterfly, what I call, and I teach you how to play that and how to identify. This is a Gertley here. I mean, bad Gertley start the move, butterfly ends the move. Then a correction starts with again bat or a bearish bat or bearish butterfly, and it's Elliott Wave and harmonic goes side by side, and that is what I teach in my webinars, and also send the charts out whenever I see a solid trade setup. So if you want to join, you are welcome. I think the link or whatever is going to be in the bottom. You can see. Okay, and I have a couple of indicator also. I invented those for like a divergence, which is very nice. It shows you where divergence and a key point. For example, this one right now, it is posting a divergence. If it kicks in or not, I don't know. But if you can see right here, this indicator is already making lower low, right? That's what I want to show. Right? Okay, so this is, you see these 2 points, this low and this low, the price and the indicator, right? So now the thing is that if this indicator is showing the divergence with the price and the other one is all the way down, that's a turning point for me. Let's see what happens. Okay, so this is what we're going to watch. Euro Aussie sitting on the trend line for the 4th time. This is the 4th touch. And the similar story in all the pairs. I mean, I don't want to make the long video, but this is how it is. Okay, so it's very easy. If you learn, you will pinpoint the nice turning points. I'm watching it for a turn. If it breaks, then if it breaks, I'm not gonna follow it. Let it go down and then retrace back to the TL. Okay, the 61% or whatever, or create a point B. It's gonna be like X, then A, then goes for the B point, then it will come for the C. And then I'll see if I can trade for CD or if AB is equal to CD to the downside. All right. So this is how it is. That's all I wanted to show, and invite you to come and join me in my webinars and learn. Learning is the key. Okay. So thanks.